Hi guys, welcome to the honeystocks.com market analysis for the weekend of the 22nd of June 2019. Now, I've got quite a few stocks for you to have a look at for the forthcoming week. A lot of them have highlighted entries. Obviously, the technical analysis is there for you to have a look over. But before I get into this, please, as always, just give the video a pause, give that a quick read. Now, if this is your first time here, what I like to do is to throw out some high quality trade ideas for the forthcoming week, as I said a second ago. But, just for clarity, and, if you're watching this and you are perhaps hoping to see analysis, perhaps on penny stocks, I don't do them, cryptos, I don't do them, and I don't do get rich quick schemes. I don't do trading signal alert services. I don't do any of that nonsense. I very much have a system that's based upon optimal entries into the market. I trade with a lot of discipline. And if this does help you out in some way, please do subscribe to our YouTube channel. Let me know what you think should be on the radar for next week as well. If there's any stocks that you're looking at, if there's any stocks that you like in the analysis, let me know. It all helps to promote my channel and to get it a bit more out there. So rather than me ramble on, I'll just get started on the charts. Now, I think every single technical analyst on the planet has obviously picked up on what's happened with gold this week. Now, as we can see, dating back to 2013, we've got this very clear resistance level. Lo and behold, we've broke out. Now, certainly that's not bad news if you are accumulating gold. It may be if you're looking for, some of the junior gold miner ETFs, some of the individual stocks, you should certainly be looking at gold. Now, it's very rare that almost 99.9% of technical analysts agree on something. So that, in my view, is a little bit of a warning signal in itself. But absolutely, we have to go with what price is telling us at the moment. Price is telling us that it's going up. So until we're told otherwise, I think gold is certainly some place that you can look to maybe take advantage of. Now, the first stock I've got for you is perhaps Target Corp. Now, we are approaching key level of resistance. We've broken out recently, so if you've missed that entry, then there is some scope for you to look to possibly enter on a breakout here. Now, if it's a stock that you're currently in, it's also valid at the moment to perhaps look to tighten up stop losses and to protect as much profit as you can. Amazon, again, very, very similar. I've had a lot of messages and emails about Amazon this week and what to do with it. And certainly, I think we are now approaching an area where you might want to consider profit taking. Certainly, there's clear resistance at $2,000. So I think a break above $2,000 would probably offer opportunity for those of you that are maybe looking to move into the market on Amazon. But absolutely, at the moment, I think with the potential resistance in play, then this becomes a profit target area. So certainly something to keep an eye on. Now, Square Inc. Now, I suppose, those of you that follow me on social media quite closely, you'll know that this was a play that I was waiting for quite some time. Taking the entry, it's now off and running. But I think now that we've moved above another key area of potential resistance, which we did actually find a bit of a rejection earlier in the week, we've moved above that. We've come back down to retest it a little bit. So I think provided this level holds, those of you that are perhaps looking to move in on Square Inc., I think there's a little bit of scope to do so. I don't think it's optimal. I would say that this would be the optimal entry. But for those of you that are perhaps in it, then obviously bear in mind about the $80 resistance. And again, for those of you that are maybe a little bit more conservative, you might want to wait for $80 to clear, and then you've got a clear run $20 upside. So Square Inc., if it's not on your list, guys, it absolutely should be. United Rentals, URI. This is a stock and a chart that, again, I'm waiting patiently on at the moment. I think as we start to approach this level of resistance, I think if we break above that, again, I think there is some really good upside to be had there. So certainly, I mean, if United Rentals is not on your radar at the moment, then I think it probably should be. Next up, we have NVIDIA. Now, again, NVIDIA very similar to United Rentals. Obviously, companies completely different, but with NVIDIA, we've got this massive downtrend. I know that for the 2-3 years previously, it was on an absolute rocket ship, and certainly, there was a lot of money to be had. There's probably a lot of you out there that are maybe bag holding at the moment on this drop. There's maybe some of you that were in the stock previously, got stopped out. Maybe you're looking for another entry into the market. Well, something's got to give soon. Very similar to Square as well, where we're just patiently waiting for a bit of a breakout here. And I think there's probably a good bit of upside potential there. So if NVIDIA isn't on your list at the moment, then I think it probably should be. Now, Tandem Diabetes is one that a couple of guys have messaged me about this week. Now, certainly with Tandem Diabetes, the stock is moving at the moment. We are in a bit of a chart pattern. Now, we are at the lower end of that chart pattern, so if it breaks down, then that's potentially not great news. So for me, I wouldn't really be looking to take any gambles here. I think that the safe play here is for it to just advance the 10% and just wait for some sort of breakout here. I don't think there's any risk to reward proposition by taking a breakout on this triangle pattern. So I think that the logical entry would be waiting for resistance to clear historically from March. So again, yeah, Tandem Diabetes is one that I think you should be considering. So NOC. Now, the stock is obviously having a really good year. It obviously fallen off a cliff last year, starting to move again. Now, for those of you that are maybe looking to move in at the moment, we are approaching, multiple hurdles of resistance. Now, depending on what your situation is with this individual stock, if you're currently in the stock, again, very similar to the scenarios with, I suppose, Amazon, where each of these levels does represent potential resistance. Now, obviously, the hope is that it just breezes through the levels and goes on to make new highs. I think that's the best case scenario, and it's certainly a scenario that I would love. But for those of you that are technically minded, then it certainly just pays to understand where support and resistance is, especially if you're trading options. Maybe you've got time decay to factor in, then absolutely you need to be 100% aware of these levels. So this could fall away a little bit, but there is a bit of a support level here, so that's not bad news. But certainly a break below this support level would not be good news. So certainly with NOC, I think the message is maybe proceed with a little bit of caution. Lockheed Martin, LMT, is close to breaking out. Now, again, very similar to the NOC, really good year so far. I think it's fair to say it's on a bit of a rocket ship at the moment. Certainly, would be lovely if we get the breakout above 360. I think if it moves above 360, I think the next logical level is 400. And then, hopefully it just continues to breeze through the levels. But, absolutely, if we get a rejection here, which we did get a little bit of resistance on Friday. Now, it's not significant resistance. I fully understand that. But there is a question mark being asked at the moment of Lockheed Martin. And if you're in the trade at the moment, you can absolutely think about taking profits with a view to moving back in again, just in case it does reject. Google, again, I've been asked quite a bit about Google over the last week or so, and Certainly, one of my clients has taken a position in this, but certainly it was more towards the $1,000 level, which I would deem to be optimal. Now, it's obviously advanced, a good 10%. Vince is doing very, very well. However, we're now at $112. There's a very big question mark being asked because we're at the 200 SMA, which is generally a barrier for price. It's a bit of a hurdle. But when you look left on the chart, it's very easy to understand why it's so unappealing from a risk to reward perspective. Um, you're essentially looking to take an entry in the middle of no man's land, as I like to call it. You've got resistance at 120. So, I mean, if it goes to 114 and you get the break above, is a $6 upside before potential resistance worth it? I don't know. That's a question that I think you could probably ask of yourself. But certainly, Google at the moment isn't massively appealing. I think it would need to start to kick through the levels. I think there's far better charts out there to be trading, if I'm being perfectly honest. And I think I've probably highlighted a few already. Next up, we've got Funko. Now, certainly this is moving. It's had a good sort of year so far. One of my guys, David, has got in here on this breakout, which is lovely. But if you've missed that breakout, then absolutely there's a potential for a pullback to be had there. There's obviously a bit of upside potential. I think there's many of us out there that like Funko as a company. They're pretty cool. But absolutely, I think a pullback entry. I don't see the point in jumping in at this moment where it might be a little bit overextended when we look at things like momentum and so forth. So certainly a pullback entry would seem logical at the moment if you've missed this entry here. Now, I've still got quite a few charts to go through, maybe another, I think, 6 or 7 max, I think. But if you are enjoying it, like I said at the start, if you are finding value from this analysis, please do subscribe to our YouTube channel. Give us a like, give us a thumbs up. Let me know what you're wanting to trade. It all helps with the YouTube algorithms and to promote my content as a recommended video and so forth for other stock market channels. So if you can give it a thumbs up, it'd be massively appreciated. Now, next up, we've got MICRON Technology. Now, this is a scenario that we're seeing quite a lot. Now, we've obviously got earnings coming up on the 25th of June. And certainly, this is a stock that I'm watching. Very similar kind of scenario to quite a few charts that I've highlighted already. But I think the importance of earnings on this one is pretty big. If they miss earnings and Wall Street just doesn't like it, you could probably say goodnight to MICRON Technology. I think if it breaks below 30, I think you just start waving, bye-bye, and you just short it. However, if we get positive earnings, blowout earnings, which again is absolutely possible, nobody knows what's going to happen with earnings. If you don't know how to play earnings, I've got a mega popular blog on this subject. It was written back in 2017, so feel free to go onto my website, check one of my early blogs on earnings season, how to play it, and you'll find a very profitable method. But I think, the safe approach here is just, again, wait for this breakout to the upside to buy the stock. And like I said before, if it breaks down, just look to short it. It doesn't get any more simple than that. We're pretty much at a halfway house at the moment. So, yeah, MICRON should be on your radar for earnings coming up this week. Now, I know a lot of you are obviously, aware of the whole Iran-US conflict at the moment. Now, there's many of you out there that are, fixated on stocks. There's a lot of you that will be going back and forth, and you'll be trading the same stock over and over. You'll be going back to AMZN, you keep going back to Google, you keep going back to Square, but that's not really the way that you should be looking to approach the market. I think when you have an understanding that, when one market maybe starts to stall a little bit, there's other areas of the market that, like to move. When there's certain areas of the market that are moving due to news events, it also pays to be able to identify the strength within those other areas. Now, obviously, with the conflict, oil is moving. Now, I'm not going to get into this chart too much, but this is obviously the chart for US crude oil. Now, all I'm simply going to say is that oil is moving. That's it. That's all I really need to say about it. I don't need to get into the history. I don't need to get into the technicals of it too much, because price is the number one indicator here. So oil is moving. Now, what that means is when oil is moving, we can usually look to the big oil companies for entries into the market, because if oil's going up, it stands to reason that the components within the energy sector and so forth are likely to move as well. So I've got a few stocks here that might catch your radar. First up, we've got Chevron. Now, first thing to say is it's a horrible chart. Okay, I don't like the chart. I don't like the ups and downs. It's very similar to Tesla, which again I just won't trade. But if we're looking for optimal entries into the market, which is what I'm all about, there's a very big case to be made for Chevron. If it breaks out here, that it might well start a bit of a trend. Now, it could also continue to just be very volatile, but I think all you can really do with the oil companies is when oil starts to move, you take your entry, you find your entries, and then you just manage the trade thereafter. And absolutely with Chevron, there's a very definitive area of resistance. I think if you get the break to the upside, it's worth considering. Are there better looking charts out there? Totally. But if you want exposure to energy, oil, and the potential upside that a conflict would bring, then it makes sense to start to look to companies like Chevron, ConocoPhillips. Again, I've highlighted this. Again, this kind of setup, breakout to the upside, I think would offer a good risk to reward. I mean, if you look at the potential upside there, potential barrier at $70, but then there's a bit of a clear run to $80. So yeah, I think ConocoPhillips is one that I think should be on the radar for some of you as well. Facebook. Now, certainly Facebook has been the one stock this week that I've been emailed and messaged about more than any other, just purely down to what one of my guys did this week. And for those of you that don't know, if you're watching this for the first time, one of my guys had a contract. Well, let's say a contract. He had 800 contracts in Facebook, and he turned $7,000 into $430,000, which in the space of a week is just incredible. It's a once in a lifetime type trade. Feel free to go and watch the video on it. I've done a breakdown of it. There's the screenshots of the account in question and so forth. It's all legit. However, Facebook is looking to test $200, I think. Now, as it comes towards this becomes price target one. There's a chance, every chance of resistance here, and it might fall away again. It does seem like it's in a bit of a range at the moment, so that should absolutely be on everybody's mind. If you get a break to the upside, then absolutely you've got then profit target 2 that comes into play. But it obviously needs to get through profit target 1 in order to achieve profit target 2. So yeah, for those of you that are currently in the Facebook trade at the moment, if you're doing pretty well on the stock, it's obviously having a really good year so far. It's obviously had a good few weeks. However, I think it just pays to understand the technicals a little bit, understand what represents potential resistance, and if you get a break to the upside, happy days. But absolutely, if you're in Facebook, just be a little bit cautious at the moment. Now PayPal. Now PayPal is obviously moving, really, really well. I think bullish certainly above $115. I think that there's also the case to be made that you can actually be bullish on PayPal above this trend line. So I think any pullback entry is absolutely valid as well. For those of you that like to cut your trades early, though, certainly a breakdown below this level, that might be the point where you want to say, okay, let's just revisit you another day. But for those of you that are looking to maybe take advantage of any substantial drops, then I think there's a case to be had that you can take an entry in here. Next up, we've got Roku. It's obviously had a 240% move this year, which is just incredible, ridiculous, whatever you want to call it. We're above $100. I think we can say, yes, we're bullish above $100. It's a big barrier for price generally. The momentum is declining a little bit. So I think if you get a break to the downside of $100, it's probably not good news for Roku, at least in the short term. So for those of you that are currently profiting on it at the moment, again, it pays to just understand what support and resistance is doing. But for those of you that are looking for a new entry into Roku, I think there's the potential that it's actually offering one in the next, couple of days. So yeah, above $100, I will remain bullish on Roku. Now, we also have CDNX. Now, CDNX has obviously had a really good year. Obviously not Roku good. However, not all charts are doing what Roku is doing at the moment. So we can always look to other charts. We obviously want to identify strength within the market. So CDNS has broken out of a range, and it's now, in my opinion, looking to take the next leg higher. We've had a bit of a breakout, followed by what looks like a potential retest, and then hopefully a strong move to the upside. I think a break back down below this level probably isn't good news for CDNS. I think that would probably trigger quite a lot of selling action. So, just above $70, I will remain bullish. Below that level there, you just say thank you very much, and I think move on. I think that's probably the logical way to look at it. And I think, if you're watching this and you're somebody that struggles a little bit, then you can maybe stick around for a couple of minutes here just while I walk through a couple of things, because whilst I understand that these market analysis videos that I like to do every month or so are super valuable and they help a lot of people, you might be watching it and thinking, what the hell is that? Well, I like to keep my charting, my trading, everything, completely straightforward. I don't like to overcomplicate things. I completely believe in simplicity over complexity. I think that's where success is found. And, if this is your first time here and you're just, coming across my work, I'm Sam and I run honeystocks.com. I am currently studying towards my level 1 CMT designation, exams and so forth. I will hopefully, become a chartered market technician, which is a pretty big deal. I know that, those of you that have followed my work for the last couple of years, fully appreciate what I do, and, long may that continue. Thank you everybody for all the emails, the messages and so forth. I really do appreciate it. But if you're somebody out there that does struggle a little bit and maybe you're looking for a bit more consistency in your trading, I do understand that the path of a trader can be a pretty lonely one sometimes. It can be difficult. There's lots of ups, there's lots of downs, especially if you don't have consistency. Maybe you don't have a drilled down method, so to speak. Maybe you're just all over the place a little bit. But I think the one thing that I like to ask is, how much easier would things be if you didn't feel like you were at the mercy of the stock market every single day? What if you're able to build a trading plan and maybe had a rule set for the rest of your life? And I know what those tools have done for me, and I know what they do for my clients around the world. And with what I do, I'm very unique because within my trading group, I actually publish every single trade idea. I update every month just every single trade idea that I post into my client group for complete transparency, so that anybody that comes in and learns what I do, everybody can see what charts I'm posting to my client group, and they're all logged on my website for everybody to scrutinize. Now, I'm not saying to you for a second that you're going to achieve 300% returns in a year or anything like that. All I'm saying is that these are the charts that I've provided my client group. That's the performance. If you have an understanding of entries, exits, and so forth, then you can obviously look to extract as much profit as possible, from these charts that I provide. Obviously, it's probably closer towards 400, 450% after this month, but certainly that's 2019. I logged every single trade idea last year again. Yeah, so for those of you that are maybe looking to align yourself with a style of trading, maybe you want to align yourself with a group of just incredible people based all across the world. We all have incredible approaches to the market. It's all based on simplicity. And I do know that, it can take a couple of years, especially if you're maybe learning from YouTube, if you're learning from maybe losses at the moment as well. I know the process takes a couple of years, and there's many of you that will be, trying to learn from YouTube and stuff. You'll be trying to read every single book under the planet. So I know that it's frustrating, especially if you're in that beginner phase where you're just trying to consume all this content. You'll be reading up on volume, EMAs, stochastics, MACDs, and yeah, a lot of it you don't really need. And certainly, as somebody who, as I said, I'm going through the CMT process at the moment. I have an understanding of technical analysis, which is better than most. There's a lot of so-called experts out there that are teaching and they're promoting themselves as technical analysis gurus and so forth. And whilst I recognize I'm not, the top of the tree, so to speak, I think that there's many analysts out there that I absolutely look up to and admire. But when we talk about technical analysis and how to profit and understanding of price, certainly my understanding is exceptional. And I do understand that when you start to take those losses and you get frustrated, I know what ultimately happens is you'll end up saying that to the market. And that's the frustrating thing for me, because I know that trading doesn't have to be as complex as, the likes of CNBC and Bloomberg and all the rest of it would, have you believe. And, at honeystocks.com, we genuinely believe in making a bit of a difference. You can go onto our website, you can have a look at all our testimonials. They are all legit. I have a code of ethics that I need to follow, and certainly everything that's published on my website is fact. And certainly I would encourage you, if this is remotely appealing to you in any way, shape or form, and you would like to maybe have a chat with us, you can ask yourself if you want to keep doing it your way, or maybe you would like to learn a bit of a new approach. And if you do want to learn a new approach, it's very, very straightforward. Like I said, I don't like to overcomplicate it. All you need to do is just jump onto our website, click apply, just choose a time, tell us what you struggle with, and we'll have a 15-minute conversation. It really is that simple. Obviously, give us as much information as possible. It does help to filter out a lot of the early stages of the conversation. If I know exactly what you struggle with, and maybe there's something I can help you with. But like I said, very straightforward. Just go on there, choose a time, and I would be delighted to have a conversation with you. Now, because the social media promo is going out, I've opened up my calendar for the next 3 days. So if you would like to have a conversation with us, then by all means just jump onto the website, choose a time, and we'll take it from there. But if you have stuck around till the end, from the bottom of my heart, thank you very much for watching, and I hope to speak to you soon. Thanks.